Hi everyone, and welcome to the Buffett and Beyond weekly video stock analysis. And this methodology of clean surplus is based on the book Buffett and Beyond, second edition, published by Wiley. And this week we're going over Taiwan Semiconductor. Why? Well, because it's up only 97% year to date, and this is only October. So yeah, this is a very, very good stock. I'm going to take a look at it. But remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's look at Buffett and Beyond weekly stock analysis video stock attributes. And Taiwan Semiconductor Manufacturing, right in here, has pioneered the dedicated semiconductor foundry in 1987 and is the world's largest dedicated foundry. And then right down here, earnings per share catapulted nearly 40% year-over-year basis, thanks to a 35% advance at the top line, and it's even more than that. That just came out over the past couple of days, folks. Continued strong demand for AI-related products right in here, more than offset normal seasonality in for smartphones. And Taiwan Semi is a primary supplier of chips to industry heavyweight NVIDIA, one of our favorite stocks, which augurs well for sales growth moving forward thanks to strong demand for the AI-related chips. And their annual manufacturing capacity is 16 million wafers. That's a lot of wafers, folks. Has about 76,000 employees, so it is a big company. And yes, semiconductor, here we go. This is the important part. Semiconductor, or Taiwan Semiconductor Manufacturing, is significantly expanding its presence in Arizona with, get this, a $165 billion investment. Where does it get all that money? Including building multiple semiconductor fabrication plants, advanced packaging facilities, and a research and development center foundry, all in Arizona, which is a state in the U.S. of A. And let us look at some of these numbers relative to the average stock out there. By average stock, I mean the S&P 500 plus another 500 stocks that we have in our database. So when we look at the average stock, we're looking at about a 13.5% return, clean surplus return on equity versus Taiwan Semi at 32.5. So we're looking at 2.5 times that of the average stock. Now think about these two numbers as a bank account. Would you rather put money in your bank account, or a bank account that's earning 13.5%, or one that's earning 32.5%? Yeah, quite a difference. Then when we get to the net income, we're looking at almost double that of the average stock. Now the net income is the clean surplus earnings. So it's the earnings that we see every day on stocks, but clean them up for non-recurring items so that we can compare. This is a comparable number right in here. We want to be able to compare the core operating efficiency of a company, not the things that happen just once out of the blue, but happen during the normal course of operations. Now the revenue, twice as much as the average stock, so there's no doubt there. But look at this, because the net income is so much more, a higher percentage than the revenue, it means this company is very, very efficient at taking that revenue and bringing it to the bottom line. That's what we like to see on a stock. So let's go to the numbers a little bit more inclusive here, and we want to look at the net income. Again, these are the clean surplus earnings. This number of $11.30 for 2026 was raised from $10.80 just the other day, and for 2025 this $9.80 was raised from $9.35. So we can see that just as even since we recorded something on Taiwan Semi back in July, these numbers have gone up over the past couple of months. In fact, these numbers are new just this past couple of weeks. Then let's come all the way over here to net income growth, and we talked about, net income growth is about 2.5 times that of the average stock out there. But revenue growth, this number in here was only 4% just before the other day. Now it's raised to 12%. This number was 22%. Now it's raised to 34.3%. That's the revenue growth. So yeah, AI has contributed a lot to this stock because orders have increased greatly. So a lot of people are buying or getting into the AI business, and a lot of companies, and what we've noticed as we're undergoing our research is that there's a lot of companies starting up teaching other ongoing companies how to use AI more efficiently. And that's where the growth is, the companies that are teaching existing companies more about how to use AI. And if they're using AI more and more, that means Taiwan Semi and also NVIDIA are making more and more money because they are producing those semiconductors and those chips that AI can run on. So it's one big circle in there, folks, because all of this is making existing companies more and more efficient. Now let's go over to the last 12 months. And last time we went over this stock was way back in here. And we thought, wow, after this run, first of all, you want to look at this line right in here. This is like a 50% line, and we can see that this stock was way overbought, and so we thought that this was a top in here, and it actually was, but the price didn't go down very much, did it? So it stayed there, dropped a little bit, gave us another buying opportunity in here, and this is all since we last reported on this stock, and look at these highs that it went to. So last time we reported on the stock, it was around $230, $235. Right in here, we reported that. How can it go much higher after this beautiful rise, going to new highs? Well, settled down for a couple of months, corrected just a little bit. I don't even want to call it a correction. Went down just a little bit to the 50-day moving average. That's this blue line in here. And boy, jumped all the way up. And we're going to talk about this in a few moments here. Now, let's look at the past 5 years. Well, it was going as good as the S&P 500. S&P is this blue line in here. Why? Because when they talked about Taiwan Semiconductor, they thought about Taiwan, and Taiwan evidently, the land itself evidently it once was part of China, and so it's separated, and you've got all the news about China going and invading Taiwan. So that's why this stock was kind of, I don't want to say in the doldrums, because if you're doing as good as the S&P, you're doing pretty good for a stock. But then it came out with the announcement that it was going to invest in Arizona here in the United States, billions of dollars, and the stock shot up, corrected, and then boy, oh boy, went all the way up. And this is where we said, wow, we're at new highs and we're overbought according to that one indicator. And then if we waited just a couple of months in there and got another buying opportunity, I'm going to show that right now. And in fact, here it is. So remember, back here is right about where we did our last report. We were overbought according to this indicator. This is your 50% line, and we like to see stocks that are below. Look over here, way over here. It was way below. That was a buying situation. Then over here, it's a topping situation. The stock did not go down very much over the next 2 months, but it kind of stayed right around where it was, right? Went up a little bit, down, then down a little bit, and then down, made a little double bottom in here. But this indicator turned up again, and it said, well, we're getting ready to go back up again. We thought this green line, which is the 20-day moving average, was going to fall below this blue line, which is a 50-day moving average, and that's a no-no out there in investment land. You don't want to see that crossover to the downside. But boy, it touched that line and then just took off like a rocket. So we thought $235 right around there was a high point for this stock. But once it did that double bottom right in here, and then it took off, and now it went above the high just the other day was at $307. Wow. And right now it's correcting a little bit. See, all the way up here we got a short-term sell signal, very short, and this is days. That's all this signal is for. But down here, this is our intermediate term indicator, and it looks like it might be turning down. So we might get another, at least, reversion to the mean, and that's the 20-day moving average. When any stock or the index gets too far above its 20-day moving average, it eventually comes down to meet it, and the 20-day moving average goes up to meet it too. So it's a combination of the two. With a strong stock like this, it may be exactly what I just said. 20-day moving average moving up, the stock moving down a little bit, and then it settles out for a couple of months and does one of these where it settles out and then all of a sudden takes off again. So when you have a stock that's doing good, folks, they tend to stay good stocks, and you just have to be careful a little bit because, wow, they get overbought for a while, then they don't do anything for a couple of months, and remember, Microsoft didn't do anything for about 5 years, and then all of a sudden it took off like a rocket. One of the best performing stocks this year out of the larger stocks that we follow. So remember what our goal is, folks. Our goal is to build your wealth faster and safer with better than average stocks. And Taiwan Semi is certainly a better than average stock. So, folks, we had another great week in the market, and the market should take a little rest in here. But boy, oh boy, just go out this weekend, clear your head, spend some of that money you just made, be with your family, maybe even have Sunday dinner with the whole family. Go out, clear your head. Most of all, folks, be safe, and we'll see you right back here in a couple of days.